All right. Today's Tuesday, the 8th of July. This is a recap for the stock market activities today. And folks, I got a good one for you tonight. But before we begin, few programming updates. If you happen to be a member in the channel, we produced a video earlier today talking about my secret indicator. Now, whether you trade stocks or you invest in them, we know that the entry and the exit are really important. You can be right about something, but your entry is not pretty good, and that reduces your chance of profitability. So this secret Maverick indicator will help you out. Really simple stuff. It's going to help you out making better decisions. We have also produced over the weekend a review of the unusual options market activities, aka the insiders activities, from the month of May. And we reviewed which ones worked out, which ones did not work out, and what was the proper exit point for the trades that did not work out by the insiders, and what was the profit taking point for the trades that did work out and why. And folks, we get high marks from the viewers about these videos, educational videos. People love them and they get a lot of benefit from them. You don't see a lot of things that are similar on YouTube or anywhere, really. You can't grab a book and learn this stuff. You're not going to find it. So all of you watching right now, consider joining us as a member. I'm going to leave a link in the description of the video and in the comments. I'm going to pin a comment for the links, how to join us as a Maverick member on Patreon and YouTube. The other thing is we're going to do the US-Japan trade analysis in tomorrow's video, not today. Today we're going to talk about copper instead. We're running a little bit behind schedule here, so we're going to combine the videos today in one. But we're going to be back on track in the new programming beginning tomorrow. Without further ado, let's dive right into it here, folks. In Focus tonight. Tariff Man, he's back. And probably he has no other choice but to be back, really. He can't tackle this time around. And of course, yesterday we talked about the letters, right? He sent all of these letters, just changing the name of the president and sending all of these letters all over the place. He's going to pay 25, 30%. We also got the announcement that he's going to add an additional 10% tariff on anybody who joins the BRICS alliance. So you get a tariff, she gets a tariff, he gets a tariff, everybody gets a tariff. And today, Tariff Man came out and said that he's going to impose 200% tariffs on pharmaceuticals very soon. The market, by the way, remains skeptical because 200% worth of tariffs on pharmaceuticals would have crashed big pharma stocks today, but they didn't react that much. So the market has a degree of skepticism that, he's going to tackle, he's not going to do anything anymore. The market, matter of fact, is priced for perfection. The market is betting that we're not going to have tariffs at all. He's just going to chicken out. Or if we have tariffs, we're not going to see a negative economic impact, which is a fantasy, really. So it is a dangerous place to be in for the market right now. But the scope of this program tonight will be the other tariffs that were announced today, which is the 50% tariff on copper imports. We already have 50% on steel and aluminum. Now we got copper too. All of these metals are really important in manufacturing. They go all over the place in the appliances that you use, the cars, the laptops. So the prices of everything pretty much will go higher as we see inflation in the price of these materials. But why is Tariff Man right now in a really tough corner? And he dug his own grave, by the way. Like, this tough situation that he's in right now is of his own making. See, Trump thought that he's going to talk tough and bark loud, and everybody's going to come out kissing his ass, as he said before. Oh, they're kissing my ass. Already, it's been more than 90 days now, and I guess the kisses in your ass cheek went dry, because nothing happened, really. And then he says, of course, with the Asian accent, they're all going to come out. Mr. President, we want to make deal. And of course, nobody really wanted to make deal. Once they saw the tackling and the backtracking and the fact that he's a one-term president, and maybe the courts are going to toss out his tariff abilities and powers. And on top of that, of course, all of them watched the stock market crashing and then him backtracking and said, okay, we don't have to respond to any of this. And now Trump is in a tough corner because he thought they're going to reply to him and make deals. Nobody did. And now he has to play tough again. What are the consequences, though, if he goes with the tariffs? And I said that the tariffs are part of Trumponomics. He believes in them. He loves them. The problem is there are a lot of consequences if he goes with the tariffs. And in a minute, I'll show you why this is the only choice that we got. We don't have any more choices. After passing the big ugly bill with the addition of $5 trillion in the deficit, this is the only option that we got. But anyways, the consequences if he goes with the tariffs: number one, destroy the economy with additional taxes on businesses and consumers, because that's what tariffs really are. The business that imports the goods will pay the port authority and they're going to pass the extra cost down to the end consumer. That's how it works. Number 2, crash the stock market as corporate margins shrink and consumers unable to absorb increased inflation. We already talked about the weakness in the consumer, so if you have all of these businesses importing stuff and they can't eat the tariff, quote unquote, because it's going to reduce their margins, and on top of that, they can't really pass it down to the end consumer because we can't handle it. It's too much. We're broke. Then the business has to eat it, has no other choice, which means reduction in margins. That's not good for the stock market. And number 3, increase isolationism and strengthen new alliances such as BRICS. You're going to see a lot of countries viewing the U.S. as a hostile trading country and not a good business and reliable partner, so they're going to have to join other alliances and create other economic agreements. And that's probably going to put the U.S. face-to-face with these kind of alliances, be it BRICS or other kind of alliances. If the administration decides to go with no tariffs, tacoing, backing out, fugazi deals, what is the problem? Now with the passage of the big beautiful bill, so-called, with the $5 trillion increase in the debt ceiling, if you don't plug that in, you're going to keep and increase the budget deficit. What are the consequences of the budget deficit going higher? Well, of course, interest rates will go higher because folks are going to demand more for the bonds that they buy from us. To buy our debt, they have to secure a higher interest rate. Number 2, the U.S. dollar will keep crashing because we got to print more. We have to borrow more money. And that means that the value of the dollar, supply versus demand, will continue to be against the currency. Number 3, loss of credibility. You bark, you threaten, you play tough, then you chicken out. Now you're not going to be trusted in anything else. Tough choice. And right now, the Trump administration, what they're doing is just kick the can down the road and enjoy the delays and lengthening all of these negotiations, so-called. And in the meantime, the market buys it. But at some point, we have to face the inevitable. Is it going to be tariff or no tariff? And both of them have bad consequences for the economy. Now, mind you, I say that the tariffs are the only path that we got left, the only option that we got left, and they're probably going to increase, not just stay at the 10%, they will increase across the board. Why? Because you have the $5 trillion debt ceiling increase, over $3.2 trillion added to the budget deficit national debt. How do you plug that in? You got to increase the tariff revenue. So far, as is, the tariff revenue for the federal government last month reached over $20 billion. That's the highest we've seen in decades. And if Trump really wants to at least close the gap in the budget deficit, he needs to up these numbers. These are rookie numbers right now. You have to up them up to $50, $60 billion a month. That means you have to tariff China over 50%, 80%. EU has to be tariffed over 40%, Japan over 30%. You have to increase the tariff rate to secure a huge increase in tariff revenue. The other thing that makes tariffs unpopular choice and puts the administration in a really tough position, even if they decide to go with the tariff, because it is the only available option. The problem is tariffs are no longer popular with the voters. Take a look.
Okay, think tariffs hurt the economy. You know, go back to September of 2024 when Donald Trump was running for president, running for that second term. Just 39% thought that tariffs hurt the economy. Look at where this number has jumped up to in June of 2025, 57%. That's a nearly 20-point rise in less than a year because they have seen the impact that tariffs and the thoughts of tariffs can have on the economy. And just 28% of Americans, voters, think that tariffs are now good for the U.S. economy, including just, get this, 16% of independents. So the bottom line is, like tariffs in theory, hate them in practice, and 57% of voters now say that they believe that tariffs hurt the economy.
So right now, the game plan is keep extending, keep kicking the can down the road, keep giving false hope, and then we'll see what happens. Now, this program, I'm going to discuss what happened today with the tariff situation using this interview that Commerce Secretary Lunatic did today with CNBC. It illustrates for you that they have no idea, no clue what they're doing right now. Absolutely not. And a lot of lies, a lot of misinformation going on here. But we're going to dissect it one by one, so you don't want to skip the interview because I'm going to pause and comment on it. Let's begin with a question about what is the current situation about trade and negotiations, Mr. Commerce Secretary Lunatic. Take a look.
But we want to hear for the record from you, the Commerce Secretary, about just where you think we are with regard to trade negotiations as a whole as we approach that previously stated July 9th deadline for tariff deals.
So you saw 14 letters went out yesterday. You should expect another anywhere from 15 to 20 letters to go out over the next 2 days, really setting down tariff lines for the key driving countries. And then we'll set out a general letter to the balance, sort of setting out where they're going to be. The president is setting these tariff lines. The president is driving this agenda. This is his agenda. He knows how he wants to play it, and that's what's happening. So we'll be setting those tariff rates, and then they go into effect on August 1st.
Mr. Secretary, the president may be driving the entire negotiation and conversation, but that doesn't mean that folks like you and Treasury Secretary Scott Bessent aren't out there trying to execute the plans along with U.S. Trade Representative Jamieson Greer. What do you get as a sense for how these negotiations are going with these multiple parties? Do we feel as though there's going to be a more long, drawn-out, contentious conversation, or do we feel like we're in the 7th, 8th, or even 9th inning with many of these major counterparties?
Oh, we're definitely in the 8th or 9th inning with these counterparties. So what's happened is many of these countries have made us offers to finally open their markets. You know, they go slowly, they go with it, and then finally they come to the table at the very end.
So the beginning of that answer was pretty much snake oil salesman. He doesn't even understand what he said. Doesn't make sense at all. And then at the end of the question, he goes, oh, this is the 8th to 9th inning in the negotiation. Well, if that was the case, then why extend the deadline all the way to August? You already gave a 90 days window for negotiation. Why extend another 30 days if indeed we're really close? Just eliminate all of the deadlines and say, okay, we got agreements. We're at the 9th inning. We just have to put some minor stuff going on here, minor details, and sign it. And we're done. And the other thing is, why send the letters, right? If we're in the 9th inning right now, why send the letters and tell these countries are going to pay 25, 35%? Why? I thought we're in the 9th inning. We're negotiating. Everything is progressing. Why do the letters? So he's lying to his teeth right now. But of course, CNBC are too much of a coward to call him out on that. Let's continue.
And they start to open their market. And the key is the president wants to balance our trade deficit with the fact that these countries are finally opening the market. And if you have something like Vietnam where they say, okay, we'll really open our markets, then the president decides, okay, this is the rate we'll do. If you're really going to open your market to our farmers, to our fishermen, to our machines, to our tools, to all of these things going into their country, then okay, if you're going to give our people that opportunity, I'm willing to cut that rate, which he did with, obviously he did it with the UK, he's done it with Vietnam. My guess is he will do it with a few other countries. But basically, if they don't really open their market and they come with these half-baked or a little bit here and a little bit there, the president's saying, look, we've got these huge trade deficits. It's time for you to pay the tariff to trade with the United States of America. Unless you're really going to open, that's how it's going to be.
Again, another falsehood. He says that China, Vietnam will pay the tariff. No. We, the U.S. business, the importer, we pay the tariff and then have to pass it down to the consumer if we can. If you can't, then you have to eat it. Vietnam doesn't pay. China doesn't pay. We pay. And again, did CNBC correct him or say, Mr. Commerce Secretary Lunatic, you mean we're going to pay, not Vietnam and China, because who pays at the port? No, they don't have the balls to even go that far. The other point is, what is the goal from these negotiations? He says that we want all of these countries to close the gap in the budget, in the trade deficit by opening up their countries for U.S. products. What are we talking about here? Somebody please make a proper interview here, not the dirt bags at CNBC. And ask the Commerce Secretary, what is the goal from closing the deficit here? I mean, we're talking about countries like Vietnam with a monthly salary wage average of $300 a month, Bangladesh with $200 a month. What kind of U.S. products do you want them to buy? They can't afford it. And we naturally have a trade deficit with them because we use them for cheap labor to reduce inflation here, for us to access cheap goods, clothing from Bangladesh, furniture from Vietnam. But they don't buy anything from us because they don't need to. They can't afford it anyways. So you see the administration settling down to these fugazi deals such as with Vietnam, which is not signed yet, by the way, where they say, oh, Vietnam is going to pay 20%. You and I know that we're going to pay the 20%. Well, what was the tariff rate on Vietnam prior to this so-called deal? It was under 3.5%. So you're increasing the taxes from any imports from Vietnam. What do we get in return? Oh, we get free access to the Vietnamese market. We can sell our shit to Vietnam tariff-free. Oh, wow. I'm so impressed. The U.S. consumer cannot afford U.S. products. We're so broke. You think people in Bangladesh going to afford US-made cars and phones and all of that? Come on. Here's the next part. This is really important because the market is so callous about all of this right now, and it's relying on names like NVIDIA and the AI mania to pump the market higher. But listen to what Lunatic says about semiconductor tariffs. Take a look.
It's Kelly, Mr. Secretary, and I snapped to attention when I heard the president saying 50% tariffs on copper, 200% potentially on pharmaceuticals. We understand it, so the Commerce Department looks through all those sectors, right, and then make your recommendation. How close to final would you say the recommendations in those two sectors are at this point for 50 and up potentially 200%?
So copper is finished. We've done with our study. We've handed the study over to the president. The president knows that he has the ability, since we've studied the market of copper, to set the market tariff for copper. He announced it today at the cabinet meeting that he intends to go to 50%, which will be similar to steel and aluminum, which are both 50%. So copper will be 50%. And the idea is to bring copper home, bring copper production home, bring the ability to make copper, which is key to the industrial sector, back home to America. We need that kind of production in America. It's important. So that'll be out today. You'll see the president will truth about it this afternoon. We'll sign a proclamation as that goes through the ordinary legal process within a day or 2 days. That will come out, but then copper will be set, likely to be put into place the end of July, maybe August 1st. So that's copper. With pharmaceuticals and semiconductors, those studies are being completed at the end of the month. And so the president will then set his policies then, and I'm going to let him wait to decide how he's going to do it. He said if you don't build in America, there's going to be a high rate. But he may consider that if you're building in America, to give you the time to build, I think he mentioned that in the cabinet meeting, give you time to build, say a year and a half, possibly even 2 years of building, and then the tariff will be much higher. But those details will come at the end of the month, and the president will set them.
Thank you. Thank you for the clarity on all of those fronts. Obviously.
She wants me to puke here. What kind of garbage is this? Oh, thank you, Mr. Secretary. Did you even hear what he just said? He said if countries want to make deals and create their manufacturing here in the U.S., we're going to give them time to do that. And then after they open the factories, we're going to increase the tariff rate on them. Come on. What is the point then? Really? The reporter didn't listen to that? Didn't say, wait a minute, what did you say here? Do you even understand what you just said, Mr. Secretary? You said that you're going to tariff countries because you want them to ship their manufacturing here in the U.S. Okay, even if they do that, you're going to increase the tariffs on them later on? That doesn't make sense at all. And on top of that, folks, we talked about the pharmaceutical tariffs today, 200%. What do you think the semiconductor tariffs are going to look like? Because if they're too steep, then guess who's going to be impacted negatively? The most important stock in the market. Pretty much the rebound single-handedly happened because of this stock, NVIDIA. If you add semiconductor tariffs, you're going to torpedo the rally in NVIDIA, and with that, the market is going to begin to get shocked. Let's continue with this absurdity.
Our audience is closely tuned in to what's going to happen there. Also, on the case of China, I remember when you talked to Brian Sullivan a little while ago, you said, look, that's squarely your kind of purview, your remit, figuring out that trade relationship. I'm left a little bit confused as to whether we have reached a trade deal or not. I think the president made some remarks in that direction in the past couple of weeks, but it was unclear what ended up happening. So with rare earths as well, there still seems to be a little bit of confusion on whether those rare earth magnets are coming in kind of decent amounts and everything there. Can you just bring us up to speed? What is the trade situation, and is that an open or closed negotiation at this point?
Okay, so we are settled with a 30% increased tariff. And then during President Trump's first term, he had a 25% tariff. So on much of China, they're paying 55%, and on the balance, they're paying 30%. And that's where we've settled things for the time being. Now, they've agreed to approve our licenses on rare earth magnets, and to their credit, they've been doing it swiftly and expeditiously. We decided we were satisfied with the movement that they were making, and so we took down our countermeasures. We started shipping ethane and software products to them and airplane parts and things like that were sort of balancing our relationship between the two of us. But we're in a pretty good place now. I think we're going to meet in early August, and we're going to start kicking off a bigger trade conversation between the two largest economies in the world, China and the United States of America. So that's going to be kicked off in early August with myself, Secretary Bessent, and Ambassador Greer. We'll all be going together. We'll be meeting our counterparts from China, and we'll have start the process of a bigger conversation. I think that's going to take some time, but at least we're beginning the process of having a bigger conversation.
So again, Lunatic is lying because he says, oh, we're going to talk with China again. Why are we talking with China again? I thought we already have a deal. I thought Trump came out and said we already signed a deal. We have a deal already confirmed with China. The White House put a celebratory note that President Donald J. Trump secures a historic trade win for the United States against China. I thought we got a deal. Why are we talking to them again? It's all bullshit, folks. They try to screw it around, and they fucked up. And now they have to deal with the consequences, and the solutions are not pretty good, as I said. Both of them are bad. So the only game they can play right now is just kick the can down the road and keep saying we're negotiating, we're meeting, we're talking. Oh, Gyna called. I thought Gyna already called. She's calling again now. It's all bullshit, folks. But I want to talk about the copper tariffs here. 50% tariff on copper. Even this is hard to understand, because if you look at the top producers of copper around the world, the U.S. is not among the top, and if you look at the even top 10 mines, the United States has none. We don't have any of the top copper mines in the world. So what is that going to do? If every piece of copper that comes from overseas will be tariffed 50%, we're supposed to increase the domestic production by doing what exactly? Look for new mines, perhaps? We also have the copper producers, the miners in this country. A U.S. company, for example, Freeport-McMoRan, the largest producer of copper in America. They own mines overseas. As you can see here, the second biggest mine of copper in the world is in Indonesia. And Freeport-McMoRan owns about 50% of that mine. So it is an American company, but they get their copper from Indonesia. So when they bring it here, are they tariffed also 50%, or what happens now? According to Freeport-McMoRan, two of the largest copper assets that they got is the South American mine in Chile called El Abra. They own about 51% of that mine. The other one is in the Indonesia, Grasberg, and they own about 50% of that too. So again, if they get their copper from Chile and Indonesia, would that be tariffed too or not? You can see Freeport here, 47% of the production comes from the US, but 23% from Indonesia, 30% from Chile. So again, how does that work? Nobody knows. You can see the production for Freeport in the first quarter of 25. They have decreased the production from Indonesia, but even with that, the production, if you add Indonesia, South America, that's huge. That's way bigger than the production from the mines in the U.S. So what does a company like Freeport do? Nobody knows. Even the copper that we produce here, it needs to be refined. Do we have refining capacity? No, we don't. And now if you're going to lock in the foreign copper, if you may, with 50% tariffs, you got to increase the domestic production. Okay, once you increase the domestic production, now you have to refine the copper. We have such a low refining capacity, it's almost impossible. So we actually ship some of the copper that we produce here to China, because China has about 44% of the copper refinery production in the world. So what happens if we get copper from a New Mexico mine, but then ship it to China to be refined? Then when it comes back, would that be tariffed 50% too? Nobody knows. And on top of that, we're not going to be able to compete with China. Now think about the investment that we need to make and the years that it would take to increase the copper refining production capacity in the U.S. But the Chinese right now, the smelters in China, they're actually losing money to refine the copper. And they're doing that so they can have the power of owning the largest market share in refining copper. They're losing money to refine the copper. All of this uncertainty and confusion, folks, led to a massive spike in the price of copper today. And guess who called all of this ahead of time? Yep, it's Uncle Mav. Take a look. Another one that I probably like more than gold if we have a dollar breakdown is copper futures. We're above the 50, looking pretty good here. It's a classic sort of a cup and handle pattern. I think we're just itching for a breakout here. Give us another flush in the dollar. Give us some good news from China. And we have a big pop coming in copper. So we got a huge pop right now, and as we get more details, we'll see what's going to happen. But what is the bullish case for copper anyways? The tariff, of course, is one huge tailwind because it increases the cost for everybody who wants to buy copper. But even without the tariff, to begin with, we have a deficit between the demand for copper and the supply for copper. Demand is way above supply. It's going to outstrip supply all the way to 2035. We're not going to be able to fulfill demand. So the price of copper will have to continue to go higher and higher and higher. And the gap begins this year, folks. You're going to begin to see that 25 to 26, you're going to begin to see consumption of copper in black, as you can see, increasing, opening up a gap with copper production. Now, on top of that, add the tariffs, and the gap will get wider and wider and wider, because now the supply is going to be lesser and lesser. And we have to produce more copper just to meet that demand, which is pretty good for the copper miners if you're investing in them, but not so good for the consumer or the picture of inflation in the economy. The other tailwind for copper, why do we see the increase in demand like this? It's because of the green energy policies, the lowering of emissions across the globe, really, not just here. You can see that demand for copper is going to surge significantly higher. In 2030, all the way to 2050, we will see a massive, massive increase in demand for copper. As we just showed you, supply is pretty much nowhere to be found. It takes a lot of investment, a lot of time to begin to mine new copper. Another huge tailwind for copper is construction. Construction requires a lot of, especially with the data centers, a lot of copper is involved, infrastructure, any transport, and we don't expect that this spending is going to slow down anytime soon, absent of a global recession scenario, which means that the case for demand for copper continues to be hot, hot, hot. Now to begin with, and this is before the tariffs that we got today, right in the aftermath of Liberation Day, we have seen stockpiles surging higher. Copper stockpiles in the U.S. surging higher. And this is why you've seen the price of copper heading higher, because they were kind of front-loading, buying more copper, stocking copper before the tariff becomes effective. Now, with the tariff already announced, 50%, it's probably going to stick. He's not going to tackle on this one. You're going to see a lot of hoarding on copper, whatever the companies can get their hands on, before the tariff situation causes shortages and massive price explosion. And this is going to be pretty good, pretty bullish for copper investors. My second largest holding, FCX, Freeport-McMoRan. I added that to my portfolio back in 2020. I kept touting it day after day, week after week. Recently, as June the 25th, we spotted a positive pattern in FCX Freeport-McMoRan. And a lot of you bought the stock, a lot of you bought call options, so good for you. We're probably going to see more tailwinds to come in copper, so you really want to be long copper as an investor, not just as a trader. Now, let's segue to the morning brief. You can pause and read it for yourself here. We talked about the zero DTE dynamics under low volume. This is what's dictating the movement in the market. But I also talked about two Chinese stocks. We talked about the casino stocks in the last video that I produced, the Vegas indicator. And the last call that we made about Chinese casinos produced massive, massive profits. And there is anecdotal evidence right now suggesting that middle-class Chinese consumers are beginning to get bored. And they have a lot of savings because they haven't been consuming in the last few years. And now they're beginning to spend again. But they can't really travel to the U.S. They don't want to. Even if they can, they don't want to because immigration, all of the hostility that we've issued against them, nobody wants to visit here. Chinese, Indian, European, nobody wants to visit. So what would the Chinese tourists do? They have to travel domestically. They have to spend domestically. And this is why I'm bullish China, but specifically the Macau casinos and the travel names. So today we added two names to the portfolio, HTHT, hotels company in China, and TCOMTrip.com, that's also another booking provider in China. And I gave you these charts right here, HTHT, H World Corporation. You look at the weekly chart, it looks that we might release that tension pattern to the upside. Not to mention, of course, the stock pays a 4.5% plus dividend. And then you have TCOM. This is the weekly chart that I gave you. It looks that a lot of this consolidation is going to be released with a pop to the upside. So we'll keep an eye on them, update you in my Discord bot. Let's add more color to this conversation, folks, by revisiting the market activities today, beginning with the closing of the indices, and here we go. The diamonds in the red, down by 165.60 points, or a loss of 0.37%. The Nasdaq, a touch positive, thank you to NVIDIA for the most part, up 5.95 points, or a gain of 0.03%. And the Spider, negative a touch, down by 4.46 points, or a loss of 0.07%. Your leading indicator is the Russell 2000. It's rebounding pretty good today, closing positive, leading the market, up by 1.52 points, or a gain of 0.69%. Now, the IWM, we call it a leading indicator, but doesn't mean that the SPY and the Qs will outperform just because the IWM is doing so. The IWM could be benefiting from a rotation out of the big caps to the small caps. It could be benefiting from retail investors just speculating. It could be benefiting from energy companies, a lot of them in the small cap category. It could be benefiting from regional banks rallying, a lot of them in the small cap category. So we're going to talk about that in a minute. But looking at the sectors today, the leader by far, energy. It was the loser yesterday. Didn't make sense because we've seen the price of the commodity going higher. But today we have a proper response. We see energy moving up in a big way, followed by healthcare. I don't know if that's going to stick or not, though, because 200% worth of tariffs on big pharma, that's devastating. Technology, touch positive, thank you to NVIDIA, not the other names really. And we see at the bottom of the pack, consumer defensive, staples, utilities, comm services. So it's a mixed picture. It's not really risk on or risk off. It's pretty much each sector on its own. When we do the breadth, the NYC is still positive, 61% advancing, 37% declining. The NASDAQ, 63% advancing, 34% declining. Now, the market maker loves to close the week at the 50-50 line. So if we've seen Monday, for example, negative, today positive breadth, by Friday, they want to add the cumulative breadth for the week to even out at a close to 50-50 kind of ratio. That's how the market maker wins. So we'll see if that's going to happen or not. And if today's breadth is any indicator, it says you're probably going to see a negative breadth either tomorrow or before the close of the week. Let's do the heat map. What do we see here right off the gate? You have the AI chip mania still intact. You see names like AMD, Intel all of a sudden joining the rally, Texas, Qualcomm, Micron. Even the data center plays here like AMAD, Lam, ASML, all doing pretty good. ANET, you have HPQ. Dell is down today, but if you look at the data center plays, still okay. So the end of the month, as Lunatic says, we're going to have the semiconductor tariffs. That's going to be an important event for the market because if it's too steep, you're going to see all of this corner right here that led the market performance. If you look, for example, 1 month out, the majority of the performance came from this corner. So if you're going to dent it, if it's going to go down because we have higher tariffs, that's an important event for the market to consider. Now, when it comes to the big caps, we have a problem with Amazon. The Prime Days not so good. The sales are down. You see Google down, has its own problems, of course. Google forgot that the production or the development of AI kind of disrupts their main business model. Oops, never really thought about that. But anyways, you have Meta down a little bit or up a little bit. You have Apple doing nothing, Microsoft nothing, but NVIDIA heading higher because of the 160 calls that we see a lot of volume on expiration date this week. So the market maker has to accommodate that by pushing NVIDIA higher. When we look at the banks, really interesting decline here in JP Morgan and Bank of America, even Goldman Sachs, Morgan Stanley down. So what the hell happened here in financials? Well, you have UBS, and UBS decided to downgrade both JPM, Bank of America, and Goldman Sachs. So you see UBS higher, the rest are down. My prediction is we wake up tomorrow, and JPM, Bank of America, Goldman Sachs will downgrade UBS as revenge. The other interesting finding is AXP, American Express, the affluent consumer. And I have bad data for you. I'm going to share it with you later about sales from Saks Fifth Avenue, Neiman Marcus. All of these sales are just collapsing. So it's maybe an indicator that the affluent consumer is under stress. So AXP, you probably want to think about booking profits out of that, maybe grabbing some short or protection, because if we get more data solidifying that the affluent consumer is weak, it's going to be one of the biggest casualties. If we look at healthcare, still doing okay. Most of the big pharma names are up. Bristol Myers, Pfizer, Amgen, Merck, AbbVie, Lilly, all doing okay, but I'm surprised by this reaction, to be honest with you. Maybe there is a little bit of skepticism about the implementation of the 200% tariffs. But if it is real and there is no tackling, it should be negative for these names. I like them. I'm still invested in them, but I'm not going to add any new position here until I get more clarity about the tariff front. Now, we look at the rest of healthcare. We talked about UNH, ELV, and of course, you've seen Centene crashing last week. All of this is going to be bad place to be in, this corner right here. And the reason is because of the Medicaid cuts. That's going to impact UNH, Elevate, going to impact, of course, Centene, Humana, CVS, all of them. So the rallies, opportunities to exit. What I do like is biotech. Of course, biotech leading the way today. Medical devices, specifically Medtronic, which we own in the portfolio, doing pretty good. Any dips in Abbott were probably good to buy. And the diagnostics are really cheap at this point. Thermo Fisher, Danner. So I'd rather be in this corner or right here in Medtronic or even Big Pharma, but not the insurance companies. In industrials, we see a little bit of a rebound here in some consumer names such as the shippers, UPS, FedEx, a little bit of rebound in the airliners, but nothing really meaningful in the industrial sector, to say the least. Have a sell-off in utilities. What is that all about? Because utilities is supposed to be defensive. Maybe it's all about the cuts in green energy, impacting names like NextEra and leading the sector down. Real estate not moving much, but you have bond yields heading higher, so that's negative for real estate. Metals, a sell-off in the miners today, but they're probably going to rebound again. Right now, with the dollar rebounding. It's probably going to be negative for gold and gold miners, but I don't think that the rebounds of the dollar is going to last for too long. Now, we see the copper miner FCX moving above 2.5% today, so you want to stick with copper for now. Steel doing pretty good, aluminum doing pretty good, the fertilizers doing pretty good, so we're going to stick with those. Energy, hot today. Names like Exxon, Chevron, the big guys leading the way today. The services are beginning to come back. Huge pop in Halliburton today. Devon is beginning to look pretty good, but I'm going to stick with here the refiners, VLO, PSX, MPC, and then grab one of the big guys right here as your main, and then add a more of a speculative play in the smaller ones that could be absorbed by a larger company. My pick is Kinder Morgan, and still like that name. Now you look at defensives, they're sold across the board, so if you thought that today we have a defensive theme, gold miners disagree, the utilities disagree, the defensive disagree, but at the same time, we don't have a risk-on theme either because the cyclicals are down. See Nike, Carvana, the travel names are all down today, so you're not seeing a risk-on kind of rotation. Not even Amazon is up. Tesla has its own options dynamic. I think it's a dead cat rebound, to be honest with you, but as I said, today's session is kind of weird. It's just low volume, zero DTEs kind of options plays because there is no unified theme. In the heat map for the ETFs, interesting that we see large caps, value, mid caps all underperforming, but the majority of the outperformance day after day after day, for the most part, comes from the small caps. What is the reason behind that? It's really hard to answer. It could be because of a rotation, could be excitement by the retail investors, but bear in mind that a lot of the names in energy, XLE, XOP, are part of the IWM. Likewise, the KRE regional banks, which have been outperforming, is also a big part of the IWM. Another one, of course, is the biotech stuff, all in the small caps, and it's been outperforming. So these three sectors right here could be responsible why we see the small caps outperforming as of late. And speaking about outperformance, we see international equities coming back. Even with the dollar heading higher, you see the EWY Korea, which we called earlier in the year, massive gains. And today, no exception, up about 3%. You see the Chinese market FXI doing pretty good. Europe is rebounding a little bit, but I think the opportunity is going to be more in Asia right now rather than Europe. Moving on to commodities. Nice pop for energy. We talked yesterday about the OPEC increase in supply. Didn't bother the market. It was already priced in. But then we have Aramco, Saudi Arabia, increasing the pricing for customers across the board. And on top of that, we have a rebound in the dollar, which is pretty good for crude oil. So we see crude adding to the gains here in both the WTI and Brent. But the gasoline RBOB is leading the way, outperforming the WTI and Brent. Now, when you see this kind of dynamic, which kind of energy stocks outperform? The answer is the refiners, and this is why we love the refiners. Heating oil, diesel up by about 1%, but nat gas remains the weaker spot, down about 1.5%. Looking at softs, we see a rebound in coffee, about 2%, but not enough. I think that coffee declined tremendously in the last few weeks, and that's going to be pretty good for companies like Smucker. The same case as OJ, rebounding by about 7.5%, but again, after massive losses earlier this year. The rest in the red, whether we're talking about cocoa, cotton, lumber, sugar, all down. Now, when we look at metals, gold went down because we see a rebound in the dollar. And honestly, copper was about to go down too, because when the dollar rebounds, metals are supposed to sell off. But we see a big pop in copper, about 9%. That's thanks to the tariff announcement. But we see platinum, palladium also moving higher, perhaps speculation that next thing you know, the Trump administration is going to add tariffs on platinum and palladium. Then you have wheat. Wheat moves, for the most part, with the moves in the dollar. They like to see the dollar going down, and they like to see crude oil going higher. So today's a mixed picture. It's not giving a clear indicator one way or the other. We see muted action across the board. Losses of about 1% for both corn and soybeans, though. Moving on to the big casino options market, what do we see here? Right off the gate, a look at the PC volume. And if that's increasing along with the IV rank, or the IV percentile, that tells me that it probably should be shorting or booking profits from whatever ticker that is. So we see that in Tesla, we see it in NVIDIA, we see it in Amazon. We definitely see it in the bottom of the pack, Wolf Speed. A lot of you speculated on Wolf. You made a lot of money, but I think this guy is going to go down back to 2 because the PC volume is increasing, put to calls volume, and you have the implied volatility also reaching as high as it can. So it's probably going to begin to reverse. But I see the dynamics positive for AMD. In the case of AMD, the PC volume is decreasing, so we see more demand for calls. And the IV rank is not really hot. The IV percentile, the number of days with volatility below today, going back a year, is about 58%. That's no biggie here. So If I have to pick here, I would say AMD still looks good, maybe Robinhood a little bit, but definitely Tesla, Nvidia, Amazon, Wolfspeed. Those are kind of, at least from this data point alone, saying you should be seller/short. Now let's look at the 0 DTEs today for the SPY and see what happened. Why did we close a touch above 620 today? First thing that comes to my eye, of course, is the volume. Who has the bigger volume? The volume of puts in the 620 outperformed the highest volume that the calls had at 621. On top of that, why did we close above 620, a touch above 620? Because look at the open interest. Which one has the highest open interest? At least closer to the money. Calls or puts? The answer is puts. The 620 contract has about 10,000 contracts open. That's what we call the open interest. So the market maker doesn't want to reward these guys, but they see the risk of the volume increasing, so they had to push the tape down closer to 620, but they closed a touch above, so these 620 puts expire out of the money, and now they have no obligation. So once again, the market maker continues to win. They continue to exercise maximum pain under low volume. Let's move on to the unusual activities and see what we have here. Not a lot today. The options market was not very active, but we see PSX Phillips 66. That's another refiner. In this case, it's trading about 130. They bought the 135 calls. The expiration date is August 15th, spending about a little over $800,000. Looking at the chart of Phillips right here, PSX weekly chart, looks pretty good to me. Looks like an inverse in his shoulder. We're above the 50 weeks moving average in blue. This is the first time we traded above the 50 weeks moving average since last year. I do favor Valero, VLO over Phillips, but all of them would do pretty good so long as the gasoline RBOB continues to outperform the performance of crude oil. Next, we have Coinbase. Continues to be hot, and somebody's betting for more gains to come. They bought the 370 calls, the expiration date November 21st, 2025. Stock right now trading about $355, so it's a big increase in the stock price that they're betting on. Spending about $1 million. And then we've seen multiple orders here for the 110 calls on PDD Pinduoduo. About $10 million buying the 110 calls for the expiration date of August 22nd. So we've seen Pinduoduo outperforming. It aligns with the bullishness in China, that investors are now looking for overseas markets. European markets are already at all-time highs, so there is no opportunity there. And U.S. markets also at all-time highs, but with weaker fundamentals. So the Chinese market makes a lot of sense right now. Let's do the charts, beginning with the E-mini futures for the S&P 500 daily chart. What do we see here? Consolidation for a little bit under low volume. Maybe we can argue that we're forming somewhat of a bear flag pattern and ready to do a correction because all of the momentum indicators such as the MACD, for example, suggesting that we have a correction from a bullish wave back to a bearish wave again. In the case of the RSI, you see a little bit of negative divergence right here. That's also a warning sign that we could begin to see the correction, long-awaited one, really, correction in the S&P 500. The Vortex indicator, on the other hand, not confirming yet. You need to see this bearish momentum firming up. You need to see the bullish momentum in blue beginning to head down. If you begin to see that, that's going to add to the MACD, to maybe the bear flag candlestick pattern, to the RSI negative divergence, that okay, now you have more evidence to begin to bet against the indices or hedge. But right now, I'm not interested to trade the indices, to be honest with you. I would be only interested if we see a break below the 200 days moving average. That's not going to come until we get to 6,000. So in the meantime, if you want to do a bearish trade, you probably want to do the 6,200, 6,100 put debit spread with the expiration date of August. That's going to be the one that I would do for now. But I'm not going to be too excited or trade the indices right now, absent of a loss of the 200 days moving average. I'm not going to buy either because it's way overbought and it's too risky here, given the news that we got and the elevated indicators that we talked about. Anything to see here on the hourly chart for the SPY S&P 500? Not really. You could still argue that maybe we have somewhat of inverse in the shoulder. Higher we go to close this gap that we opened earlier in the week. At the same time, you could argue that this is a larger bear flag pattern. We couldn't really close the gap today, so why would we do it tomorrow? And rather, we're probably going to correct down. And if we do that and we lose 620 and close below 620, probably the next destination is going to be 616. I want you to keep an eye on the IWM too, because right now it's looking bullish. But if it loses the 200 days moving average in orange right here, that's your indicator, along with many others, to add to the evidence to say, okay, now we have a leading indicator saying, watch out, the market is going to begin to correct. So long as the IWM above the 200 days moving average, it remains bullish, and it says that you have to be really careful with beginning to pick on the indices right now negatively. Here's the dollar index weekly chart. What do we see here? We have a rebound coming up here really oversold in the RSI. We're probably going to see bearish momentum turning into bullish momentum in the weekly. It's going to give us maybe a tiny rebound here, a little bit of a rebound. I would not be surprised if we go back above 100, but that's going to be small in the grand scheme of the declines. And after that, probably the dollar is going to head down again. For now, the dollar is, if you look at the monthly chart, it is kind of holding that long-term trend line, but at the end of the day, with this kind of magnitude of the weakness, you're probably going to break below it at some point. But it held right here. It held again here at the beginning. So we'll see how this is going to work out. My 2 cents, whatever rebound we do, probably going to break it sooner than later. In the meantime, if the dollar is about to firm up in an oversold rebound, that's going to be a negative for gold futures. So if you long gold, you want to hedge right now. It looks to me that we have a rejection of the 50 days moving average in blue, and we might head as far as down as 3,200 in gold. So you want to hedge via GDX gold miners puts, or the SLV silver puts, or gold futures puts, or the GLD, the ETF for gold puts. You can pick whichever method that you want. Even we have inverse ETFs against gold. You can pick one of those. Whatever method you use, you got to hedge right now because the rebound in the dollar looks that it has a little bit of footing. No worries for copper, though. Copper continues to go higher. Yes, it is overbought, but we just talked about the tailwinds. They're huge. So copper is still going to outperform dollar going higher or not. Of course, preferably the dollar goes down, but if it doesn't, you still have a huge tailwind here for copper. What about oil? Crude oil looks like a giant cup and handle pattern, which is positive. It's above the 200 days moving average. I think that it is building some energy here in a bull flag pattern to break out and trade above 70 again. I think that's the fair value for oil right now, is to trade above 70. What do we see in the bond market in the 30-year bond yield? We see a falling wedge, already broke out, and we have positive momentum showing up here in the MACD. You see the Vortex indicator suggesting that it's a toss-up. You see both the bearish and the bullish indicators moving higher, but at some point we're going to see one winner. If we see the bearish heading down, the bullish heading higher, forget about it. We have higher yields coming. And we know the point of sensitivity is the 30-year bond yield above 5%. Once that happens, the market doesn't like it. It sells off right away. Another bearish indicator is the HYG, which again, if you just plug in, for example, the SPX, and you look at the correlation, you will see here that we have gigantic correlation between both of them. And the HYG usually a leading indicator. So what is the HYG showing right now? If we look at it, we're probably seeing somewhat of a bear flag pattern that is breaking down. And we could be back at the 200 days moving average. If that is the case, going to be negative for the indices too. What about Apple? The 2 hours chart, what do we see here? It looks like a topping candle right here. And then we struggled at the 210. We couldn't trade above. And right now it looks maybe that we have somewhat of a bear flag pattern building up right here. I would say if we close below 207.5, then the pop in Apple is over. You'll see more sellers probably booking profits, and it might lead it down to 203, if not all the way to 200 again. But mind you, you need to see damage in the weekly chart because the weekly looks pretty good. It looks like it wants to head to that 50 weeks moving average in blue. Positive momentum in the MACD, positive momentum in the RSI. If you look at the Vortex, it's also showing up that the bullish momentum is accelerating. So it's maybe weaker on the 2 hours chart, but it's still strong on the weekly. How about NVIDIA? 2 hours chart remains the outperformer today. It's really guided by zero DTEs. When we talk about zero DTEs, we're talking about the weekly expiration really. But no fundamentals or no legitimate buying of the stock right now. It's just about options and the volume is huge. So the market maker has to accommodate any warning signs that we see in NVIDIA. Maybe we're seeing somewhat of a rising wedge right here that we could break to the downside. But again, I would say that NVIDIA will be dictated once again by the options market volume. The souffle Tesla, what do we do here? Because we tried to rebound. We got oversold yesterday with the drop once he called Trump a pedo again. Bull flag failed to break out in my opinion, and now if we lose 291.85, that's my number. If we do, we're probably going to flush down back closer to 270s. So tough point to be in here in Tesla. It looks to me that they aimed to close the gap, but there was a failure. And losing that 291.85 number tomorrow will be the confirmation that yes, indeed, it is a failure. Anything on Bitcoin, it reached the previous high and then stalled. Still above the 50, still above the 104 support. So right now, you can't really short Bitcoin. If you're long, maybe you want to begin to hedge because there are some warning signs such as the MACD maybe rolling over the momentum. Maybe if you look at the Vortex indicator, the bearish momentum is beginning to gather some steam here. So maybe you want to begin to hedge. When do you short Bitcoin? I need to see a loss of the 50 and 104,000. Then I'm interested to short Bitcoin because at that point, it may be forming a lower low pattern. But until we see that loss of 104, not interested in Bitcoin. Let's move on to the conclusion of this video. What do we have on the economic calendar tomorrow? Wednesday the 9th, we have wholesales inventories. And then we get the minutes from the last Fed FOMC meeting. Important, but not a market mover in my opinion. I think that CPI next week will be more important as a market mover. So once again, in tomorrow's session, the importance is going to be, do we get more details about trade, more tariffs, more letters? Do we get tacos? What do we get? If that is not the case, then we revert back to the zero DTE dynamics, where the market maker under low volume would try to aim for maximum pain. But before they do that, of course, they're guided by the volume. If the calls have bigger volume, the SPY, they move the market higher. If the puts have bigger volume, they move it down. So we'll be on it again tomorrow, folks, in Discord. Once again, I invite all of you to join us as a Maverick member, either here on YouTube or Patreon. The links are in the description. You don't want to miss any video, any conversation that we have. And a reminder, if you want to be a Top Gun Maverick, we're going to make a new credit at the end of the video. We'll make a new one for tomorrow and the rest of the month. So if you want to join us, you better do it before tomorrow. But with that, folks, if you found this video informative, please return the favor by pressing the like button, subscribing to the channel, leaving us a nice comment in the section below, and once again, consider joining us as a Maverick member. But this is all I got for you for tonight, folks. Thank you for listening. Thank you for watching. I appreciate and love all of you. I'll be talking to you again tomorrow. Good night.